Welcome back to the latest edition of LUMA's Market Report. I'm Connor McKenna, a partner at LUMA. Today we're going to dig into the return to scaled M&A in the ad tech and MarTech ecosystems, finally. But before we get into all that, remember, please download our full report at our website, lumapartners.com. This has all of the data on ad tech, MarTech, and digital content, both M&A and public markets. Let's get into it. We're just back from Cannes, where the air in the south of France was frankly just different this time around. It wasn't that it just wasn't 90 degrees and we actually got some beautiful weather, but actually the conversations on the ground this year were very different than the last 2 years. 2 years ago was the start of this downturn, and 2023 was a period where everyone was so focused internally that the tenor of conversations that we at LUMA were having were frankly just different. Last year was a period of, should I start to pick my head up? Is it time? Are people ready to do M&A? If so, what category should I be focused on? Whereas this year was totally different. Most of our conversations were about, these are my priorities, the categories I need to be in, the companies I'm talking to, and how do I get something done quickly or in the near future. So just a totally different perspective. But to give even more perspective on what's happening and this activity level, Terry has decided he's going to call in from Lake Como, where apparently he's working.
Buongiorno, Connor.
Wow, looks like you're settling into Italy pretty well.
Well, you know what they say, when in Lake Como.
I think it's Rome.
Roma, Lago di Como, stessa differenza.
Okay, so what are you interrupting us for?
Yes. Well, the main message, Connor, is that M&A is back, baby.
Bitch better have my money.
Seriously, we are seeing a resumption of deal activity in digital media and marketing after a decade-low drought in 2023. These transactions fall into one of two categories. There's the rationalization deals. These are the consolidations of too many subscale companies or businesses entering a new geography or channel. Think Cadent Adherent, SeedTech, Beachfront, Verve, Jun Group, Equato, Sharethrough, those types of deals. These won't be the highest multiple transactions, but they're needed to clean up the fragmented landscape. Expect more of what I would describe as necessary activity. Second are the strategic deals. These are companies acquired for their technology and usually in one of the green shoot growth areas like CTV, commerce media, identity resolution, and AI. Examples include Double Verify Sybids and LiveRamp Habu. These deals continue to get done at strategic multiples, often at double-digit multiples of net revenue. It's nice to see the resumption of activity. I mean, so far, we're on track with our suggested industry plan that we debuted at DMS, which was 2023 Survive, 2024 Revive, 2025 Thrive. And having survived 23, and in the midst of a revival in 24, there is a strong case to be made for the potential of a big deal market in 2025. I would attribute this to three catalysts. One, the first is an improving macro environment. Inflation is taming, interest rates could be dropping into 25, and ad growth is strong. We simply didn't have the feared recession that was anticipated, and it doesn't look like one is in the forecast. Second, cookie deprecation. Lucy has pulled the football from Charlie Brown for the last time, and we should actually see cookie deprecation in 2025. That certainty could fuel a barrage of activity in the alternative ID and broader data sector, not to mention contextual and other reinvigorated media categories. And third and finally, and this is a contingent one, if Trump is elected for a second term, he will invariably fire Lina Khan, the FTC chair, who has invoked draconian antitrust policies to block deals in technology. That and other policies that are more business friendly could create the perfect storm for a deal market to thrive in 2025.
Hey, Kawaja, you just about done?
Cosa fai? Andiamo, ragazzi. Ciao.
I guess we lost Terry. Say hi to George for me. But I really agree with those points and where we're seeing this pickup of activity. Just to play it back, Terry's 3 points were the improving macro environment, cookie deprecation, and potentially a softer FTC. I have one other point that we're seeing as a potential opportunity or reason for strategic M&A to come back. And that is that there's a whole bunch of companies that are still looking for new opportunities to grow, to get back to growth. So if you look at the ad tech and MarTech ecosystems overall in our report, they're growing at about 13% and 10% across the board. But this is not enough growth to be these high growth technology businesses. And what we're finding is that while everyone has fixed the correction in 23 to be profitable, fix things at home, as we've talked about before, that is a difficult framework to then get back to lots of organic growth. And given these companies are profitable, they're now sitting on cash balances that they need to start to put to work. And especially some of these companies that are showing risk in their TAM and long-term growth prospects. The companies that were hit the hardest in the public markets in the last 2 quarters, especially in this space, were those that lowered their guidance in the future and have started to show some risk in their ability to continue to grow at 20% plus rates in the future. Those are the types of businesses that need to start to look for inorganic opportunities to expand their TAM opportunity, get more high growth capabilities into their product platforms, and really invest for the future. And that's another massive catalyst we see driving, in particular, strategic M&A in this space. Now finally, the other thing we want to hit on is the public markets, which continue to be a pretty tough place for smaller cap or mid cap companies in this ecosystem. The markets are up overall, but a lot of that is being usurped by these massive AI hyperscaling companies. Those in the ad tech and MarTech space have continued to be a bit more challenged. It's very much a world of have and have nots. You have some growing incredibly strong and others losing a lot of market cap throughout the last quarter and year to date overall. But despite that, and what's driven a challenging IPO market, we are starting to see some companies come out. And in fact, IBOTTA was able to get out earlier this quarter in April, the first company in the MarTech ecosystem in 2024. And this actually marks really one of the last few companies that have gotten out from a technology standpoint. And almost all of these companies have had some ad tech or MarTech component. Whether it was Instacart, which is now has 30+% revenue from advertising, Reddit that's backed by advertising, Klaviyo, which is a MarTech platform, or IBOTTA, these are 4 of the more scaled tech IPOs in the last 12 months and all have an ad tech and MarTech component. So while it is difficult to get out, we are seeing that in this ecosystem, it's a space where people are finding enough scale to come to the public markets, albeit needing to continue to show that growth with profitability into the future. That's it for me. As a reminder, please go to our website, lumapartners.com, to download our full report. It's got all the data on M&A markets and public markets across ad tech, MarTech, and digital content. I'm Connor McKenna, signing off.